Hello, and welcome to the Investing from the 920 podcast starring Josh Jansen. Today we are going to cover a little bit about me, my hopes for the future, and the first stock I am going to be analyzing. So to start, a little bit about me. I'm 19 years old. I've been born and raised in GreenBay, Wisconsin, so hence the 920 area code in the name. I currently attend St. Mary's University, and there I am pursuing a finance degree. I'm going to be finishing up my freshman year, and out of college I hope to become an investment banker, and I have hopes to one day become a hedge fund manager. So what I'm going to be covering in this podcast, I'm going to be giving the background information on the company, so basically what they do, the fundamentals of the company, any upcoming or past earnings reports, the company's various prices, their competitors, and maybe down the line we will see if any guests want to guest star on the show, but that's for another time. So the first stock I'm going to be analyzing is Chipotle Mexican Grill Inc. Now I'm sure many of you know the Mexican restaurant, but for those who don't and want to learn about the company, this is perfect for you. So their company statement says, Chipotle Mexican Grill Inc. engages in the development and operation of fast casual, fresh Mexican restaurants throughout the U.S. It offers a focused menu of burritos, tacos, burrito bowls, and salads prepared using classic cooking methods. The company was founded by Steve Ellis in 1993, and it's headquartered in Newport Beach, California. So moving on to the fundamentals, its valuation. From this, I'm going to be talking about the price to earnings ratio, or the P&E ratio. So you might be asking yourself, what does this mean? So the P&E ratio measures the share price of the annual net income earned by the company. So Chipotle's price to earnings ratio is 65.90 times. Now that is greater than 91% of other companies in the restaurants and bar industry. That's really, really good. Hence why this company is so valuable. Next in the valuation, we're going to be talking about the price to cash flow ratio. And again, you might be asking yourself, what does this mean? So this measures the value of a stock's price relative to its operating cash flow per share. So Chipotle's price to cash flow ratio is 40.47 times. Now again, it's pretty dang good, and hence why the stock is very, very valuable to many investors. Next, we're going to be talking about Chipotle's profitability. So their gross margin is 26.17%. Now that's better than 68% of other companies in the restaurant and bar industry. So to be making 26 cents on the dollar is a pretty good ratio of how well Chipotle is being able to make profit. Chipotle's net profit margin is 5.95%. That's pretty good considering all the other factors that they have to include when they're analyzing their total profit. To be making about 6 cents for every dollar, just straight up profit, is pretty good. Now, moving on to the dividend, Chipotle actually does not have a dividend to pay out to its investors. You might be wondering, what is a dividend? So a dividend is money that a company pays investors to keep buying or holding onto their shares. Next, we will be talking about Chipotle's earnings report. So Chipotle's earnings report was actually on Wednesday, April 22nd, 2020. That was their quarter one earnings report. Now, the analysts projected that Chipotle would report earnings per share of $2.90. Now, the stock actually jumped, I think, about 13% by the end of the day, when they ended up beating their expectations at $3.08. Chipotle's projected earnings for next quarter only come in at 51 cents per share. Now you might be wondering why the steep decline. And to answer your question, it is mainly because of the coronavirus economic crisis. And because of this, Chipotle is not being able to receive as many orders or just have the regular foot traffic that they have going through their brick and mortar stores. And so that is declining their orders, and so they are not going to be as profitable next quarter. So today, Chipotle's final price was $867.02 a share. Now, that is an incredibly expensive stock, but due to the fact that they are so profitable and are continuing to have such growth across the nation, they are just gaining and gaining more valuations and seeing that they deserve to be evaluated and processed at a higher price than most other companies because of those reasons. Now, the 52-week price range of Chipotle was at a low of $415 a share and at a high of $940.28 per share. Now, you might be wondering, why is this important and why are you even talking about it? Well, it can be important to many, and it can have almost no importance to anyone whatsoever. But I like to look at it just to see how much, just based on the price, how much a certain stock could have room to grow. Now, if you would have bought the steep sale price of $415 a share and sold it at today's price, you would have made an incredible profit. You would have doubled your money. Now, moving on to Chipotle's top competitors, many of you know Qdoba as their main competitor. Qdoba has a very similar style and is almost the same business model as Chipotle. But there are certain things that Qdoba does differently that makes them not as profitable as Chipotle. More competitors include Taco Bell, Del Taco, and Taco John's. Those competitors aren't as competitive as Qdoba with Chipotle because they don't have the same business model as Chipotle and Qdoba. Yes, they are fast food Mexican restaurants, but Qdoba and Chipotle really focus on having their fresh ingredients and to make very good burritos, while Taco Bell ranges on almost any Mexican item you can order. I actually have not been to a Del Taco or a Taco John's before, but I can assume that they're quite like Taco Bell in their business models and what they sell. On the next episode of Investing from the 920 podcast, we will be covering the company Zoom. That concludes this episode of Investing from the 920 podcast starring Josh Jansen. I'd like to thank everyone for tuning in, and I'll see you guys next time. I would like to give a special thanks to the following people. Thank you to Ben Wiesner for the editing help, Robert Jansen from Jansen Law for the disclaimer, E-Trade for the research, and Investopedia for any questions on terminology. Please see them if you want to learn more about investing.
Hi, Attorney Bob Jansen. All of Josh's opinions are his own and do not constitute financial advice in any way. Any data or content discussed should not be relied upon for investment advice. Josh strongly recommends that you do your own research and or speak with a qualified investment professional before making any financial decisions.